Well, I think uncertainty is not good for economic growth, and it's certainly not good for transaction volume in any respect, whether it's fundraising or real estate deals. I think you have to have a lot of conviction to make deals get done these days. And if you picture yourself, you don't have fund managers up here, you have mostly advisors and service providers, but if you have someone who sits on an investment committee betting their career that they're going to put out money this week or next or the next in 6 months from now, I mean, it is not easy. So you really need a big margin of safety, you need a lot of conviction, and you better have a plan B, C, D, and E. And I mean, you heard so many different varied views up here about all the permutations and iterations of what could happen next. It must affect decision making, and it will. I think the magnitude is really to be determined.
Good. Oh, yeah.
I will say, and the implications for the U.S. is, like the uncertainty surrounding Brexit certainly was considered, but highly discounted. The pollsters got it wrong in a big way. The bookies got it wrong in an even worse way. And that's going to translate to, even though, the Trump factor, 6 months ago, I don't think it was affecting the financial markets. It was just more, good jokes and things like that. People are taking that tail risk a lot more seriously now because there have been a number of elections that have been called wrong, or crazy things have happened, and I don't think people want to get burned twice in 1 year. So even though I do think ultimately we'll see capture, and the U.S. has been capturing more of global capital flows. I do see a number of investors who'll say, you know what, let's just wait till November. Just as many from the beginning of the year said, you know what, let's wait till after June 24th. Because I think people are just really scared about these tail risks.
I would just add that, as I mentioned in my remarks earlier, there's a lot of investors who need to put the money out, and they look at a 1.5% U.S. Treasury at negative yields in Europe across the yield curve. And real estate is still a very attractive place if you have that long-term durable income. But you really do need to be protected in a lot of different ways. For those core deals, they will still trade. There may be a bit of a risk premium. I mean, it's really too soon to know the magnitude of any move. It's still attractive. It's just on the margin, uncertainty is not going to help people make decisions, obviously. And it remains to be seen how much of the market's going to move based on that.